A Bitcoin spot ETF is likely to catalyze significant capital inflows to the ecosystem, and we may see the price responding to that. What's notable is that BlackRock, in filing their proposal for a Bitcoin spot ETF, did something different than prior proposals held, and that is that they included a surveillance sharing agreement in their proposal, which would help mitigate or at least help identify any market manipulation, something that regulators had been very concerned about. With BlackRock's filing, we saw ARK Invest amend their proposal to include the same surveillance sharing agreement, and Fidelity followed suit, which has made the market more bullish on the acceptance and approval, finally the approval that we've been waiting for of a Bitcoin spot ETF.
Alyse, for anyone who has been closely monitoring the SEC's approach to crypto, what jumps out is effectively that they've been at loggerheads with the crypto industry, demanding that crypto players meet certain standards. Crypto players have been pushing back. But what's different about this story is that we're talking about a whole bunch of companies that are used to dealing with the SEC. But despite that, what are the challenges to getting these spot ETFs off the ground?
Well, that's exactly right. But in addition to the players having experience dealing with regulators, they also heeded regulatory guidance. So they knew that there was a concern around market manipulation, and BlackRock responded proactively to that with their surveillance sharing agreement. In contrast, we saw years of regulatory guidance around the application of existing security laws to the crypto ecosystem, and a reluctance for many in the crypto ecosystem to adopt or abide by those regulations. And at the same time as that was happening, unfortunately, we didn't see regulation coming from the crypto sphere itself, self-regulation. And so there's been a gap, and the SEC is pushing to fill that and to bring folks like Coinbase into compliance with current regulations.
Alyse, good morning to you then. The reason we haven't seen mega institutional investors in the space has really been because of anxiety, confusion, perhaps a lack of regulation, of course, as key factors that have always played into this. Could we soon perhaps get to a point where we do have some sense of stability? I say that on the back of all these companies wanting to get on, as Karen said, having that keenness to have dealt with the SEC in the past, and perhaps more money being able to then flow into the space.
Absolutely. So that's what we're seeing. We're seeing large traditional financial institutions want to participate and to take actions towards doing so, including through these spot ETF proposals. We're also seeing, though, traditional enterprise adopt Bitcoin and Bitcoin's payment network, which is the Lightning Network. And they've been able to do that not just because we've gained regulatory clarity, particularly around Bitcoin, but because the infrastructure itself has matured to the point where it can serve enterprise needs and institutional requirements. And so in these next couple of years, what I expect to see is enterprise taking advantage of the advancements that have happened in Bitcoin technologies. And we've seen that even in the past couple quarters. So to offer a very quick example of that, in Q2, Grupo Salinas, which is a large Mexican conglomerate, announced that they would be adopting Lightning Network through an integration with IBEX Mercado, which effectively brings Lightning Network's instant, nearly free cross-border payments to Mexico, which is one of the world's largest remittance markets. And so while it's just the early movers participating now, I expect that as they become more comfortable, they become an example for others to follow.